In the previous lesson, we talked about the different characteristics of the equities market, the stock market in general, and how to trade it. I provided a guide, so make sure you read that stock market guide as well before moving on to this lesson. But in this lesson, we're going to dig into how to actually create your watch list, how to create your stock market or your equities watch list. Now, this is part one of a part two watch list creation series under the equities market. In this section, we're mainly going to be focusing on ETFs and the sectors, the various sectors within the equities market. So we're going to dig into the sectors and we're going to find the different ETFs that actually fit into those specific sectors and so on, and actually build a proper list of different sectors and different ETFs to actually trade within. So it's going to be pretty comprehensive. I'll provide you some tools, some guidelines as well, and I'll show you exactly how to do it, and I'll explain why you shouldn't actually create this kind of watch list. But in the next lesson, we're going to focus on something totally different, a different watch list creation for the equities market. So with that said, let's jump on the charts. So as I just mentioned, we're mainly going to be focusing on the 11 major sectors here within the equities market. I'll give you a few extra additions on top of that, but we're mainly focusing on the 11 major sectors and the ETFs that fit within them. Within every single ETF, there's multiple companies that you can also go even deeper within your watch list, and I'll show you exactly what I mean by that. But that's kind of what we're focusing on here. This is a watch list that you can utilize for swing trading. You can utilize it for day trading. You can use it for your weekly watch list creation at the beginning of the week. You can also use it every single day if you want, looking for day trading opportunities. Now, the beauty with ETFs is that they're very liquid, right? And they're heavily traded. So there's a lot of volume, there's a lot of liquidity within them. So they're great for swing trading. They're also great for day trading. And they just give you an overall picture of what is happening within that specific sector, versus a company is just one stock, one company, right? An ETF holds many different stocks, many companies within them, hence why it's a great indicator of what is actually happening within a specific sector. So with that said, when we look at the charts here, one of the first things I want to show you is the various indexes within the US equities market, right? We have the S&P 500 index. We use these indexes to mainly have an understanding of what is happening in the equities market. What is the performance of the equities market? So the S&P 500 is the performance of the top 500 companies in the United States of America, right? We have the Dow Jones Industrial Average Index as well. Now, the ticker might be a little bit different. Here it's INDU. Some other charting platforms, it might be DJIA, Dow Jones Industrial Average, right? But either one of those, this is again another kind of index tracking the performance of the US equities market. Then we have the NASDAQ Composite Index, same idea. And then we have the Russell 2000 Index. This one's a little bit different because this one's focusing on small cap companies. So companies that aren't as large. There's 2,000 companies within this index, so it's mainly focusing on small caps. So it looks a little bit different than the S&P 500, obviously. And then we have the VIX. You'll hear a lot of people talking about the VIX, the volatility index. It's the CBOE volatility index. And obviously you can see this is not something that you trade. This is something that you just see whether there's fear or greed in the market, right? So the way to spot fear is when the market's pretty steady, right, and it's just going up and up and up. When the stock market, the S&P 500, is just smoothly heading upwards, you'll notice that the VIX index, the volatility index, is just slowly moving downwards. It's not very volatile, right? The lower it is, the less volatility in the equities market. The higher it is, the more volatility in the equities market. So as an example, if you look at this big spike over here, that was February 2018. So if we look at the S&P 500 and we look at February 2018, that was this pullback right here, right? That was this initial major pullback after this beautiful bull run that we had, right, for a few years. And then boom, volatility kicked in, and that's when the VIX actually started to spike to the upside right here in February 2018. right? So that's kind of what the volatility index does, is just once you see it spike up, understand that fear is coming into the market, right? And that there might be a pullback or a correction within the equities market in general. So these are the various indexes. They're mainly, again, these, you don't trade them, you just gauge the performance and what is happening within the equities market. Now, the next things that we're going to focus on are large cap stocks, mid cap stocks, and low cap stocks, right? So within, these are, again, these are not specific sectors. These are just stocks and ETFs categorized within a large cap, mid capitalization, and a small cap, so it's the size of the company in general, right? So within large cap stocks, the main ETF within the large cap is SPY, SPY. It is an ETF that is utilized and day traded pretty heavily on a regular daily basis, right? This is one of the most popular ETFs out there. It's, again, tracking the performance of the S&P 500, so the top 500 companies within the United States of America. So again, the ticker symbol is SPY, and you'll notice that there's a few different ETF companies that we're going to be talking about. Spider, so this is one brand. So SPY, Spider, S&P 500 ETF. Spider is, again, one company out there that is providing ETF services, right? So Spider is a very popular, they're very popular ETFs. They're very liquid, they're very volatile, meaning the volume is really high. I'm not saying they're like extremely volatile, but the volume is really high and the liquidity is really good. So they're very heavily traded, hence they're good for day trading. They're great for swing trading in general as well, but they're very good for day trading. If you want to day trade, the Spider ETFs, simply because there's a lot of volume within them. They're very heavily traded on a day-to-day basis, and they're very big ETFs as well. Now, in addition to Spider ETFs, we have iShares. iShares are, again, it's another ETF company out there that's providing ETFs, and it's the same kind of thing. This is an iShares Core S&P 500 ETF. IVV is the ticker symbol, and it does the same thing. It's just, it's not as popular as the Spider ETFs. And then we got Vanguard S&P 500 ETFs. Vanguard is a little bit different than Spider. Spider is a very big ETF, right? Like I said, it's great for day trading because the day-to-day volume is really high. Vanguard ETFs are a little bit different. Their fee structure is very, very small, right? So Vanguard ETFs are great for long-term investments, not for day-to-day trading, right? Because the volume is much lower. The reason being is when people buy a Vanguard ETF, they typically hold them for quite some time because of the low fee structure, right? So they hold them as long-term investments instead in passive portfolios and so on. So Vanguard ETFs, not great for trading, day-to-day trading, but really good for investment purposes simply because they have a really small fee structure to it. But Spider ETFs, they're the great ones that you actually want to utilize for day-to-day trading. So I just quickly wanted to go over that with you guys real quick. But the next thing I want to show you here is an ETF database. So this website right here, etfdb.com, there's many different ETF databases out there. I found that this one is one of the most popular and the best one in my opinion. And you can go to the directory and you'll see, asset classes, sectors, which is something that we're going to focus on right now. Industries are something that we'll chat about as well a little bit. And then ETFs by country, ETFs by region, ETFs by bonds, commodity, everything. You have ETF for literally everything. So we're mainly focusing again on the sector and industry ETFs, but in this lesson we'll mainly focus on the sector and briefly talk about the industry ETFs. Something cool, when you go to Tools, ETF Screener, and you click on that, it'll give you like a proper ETF screener where you have various filters on the side. So these are, again, some of the most popular ETFs here in the United States of America, right? In general, they're just some of the largest ETFs, not just in the US, but just in general, some of the largest ETFs. But what we want is we want to go to equity, and here we have, so we can select large caps, and right away we'll have all the large cap ETFs here. We can go to mid cap, and now we have all the mid cap ETFs. We can also go to small cap, and we have all the small cap ETFs. So again, this is just if the large cap companies, they're some of the biggest companies in the US. Small cap companies are some of the smaller companies out there, a little bit more volatile, right, than the large caps. So that's just if you want to create yourself a large cap, mid cap, small cap list. Now, if we go to sector, right, select a sector, we have 11 major sectors within the stock market, right? And those sectors, if you look at my chart right here, let me make that bigger. Okay, so the font is a little bit larger now. And when you look at my watch list here on the left-hand side, right? So I got large cap, mid cap, small cap. And within every single one of them, I have pretty much the Vanguard and the Spider ETFs, right? And I have a couple extra ones. Now, the 11 major sectors within the US are consumer discretionary sector, consumer staples, energy, financials, healthcare, industrials, materials, real estate, technology, communications, and utility, right? So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 major sectors, right? All the way from consumer discretionary to utilities. Now I tossed in a few extra ones here that I just want to track, but the 11 major sectors are these. So again, if we go to, as an example, consumer discretionary, I have XLY, which is the consumer discretionary Spider ETF. Okay, so it's again the Spider ETF. I also have a Vanguard ETF in here as well, VCR, and I have an iShares ETF in there as well, right? Just so I can kind of keep an eye out on every single one of them. Again, the idea is that I want to always have a Spider ETF within every single sector because that's what I'm actually going to day trade, right? But I also want to have a Vanguard ETF in there because that is what I'm going to use for long-term passive investments purposes, right? If there's something that I want to take and hold for long-term, I'm going to utilize the Vanguard ETF instead. And if there's something that I want to utilize for short-term trading, I'm going to use the Spider ETF instead. And iShares is there just for extra purposes, kind of thing. So the way to find these ETFs, and if you want to create it yourself, you go again to this ETF database, and here you have it. Select the sector, right? So as I showed you, we go to equities, right? Equity, you select that. You scroll to the bottom, and then you have to select the sector. So consumer discretionary, and now we have every single ETF that is within this sector. So we got XLY, which is again the Spider fund. We have another Spider fund, XLC. We have Vanguard, VCR, we have iShares. Okay, top three: iShares, Vanguard, Spider. Okay, now you can even go deeper if you want. If you want to go within a specific sector, obviously you can now look at automotive or gaming or media or retail, right? Every single sector focuses on something totally different. Then we got consumer staples, right? This is more focused on food and beverage and so on. We got the energy sector, right? This one's pretty cool. Again, same kind of idea. You can just select the energy sector and right away you'll know, okay, XLE is the energy Spider ETF, VDE is the Vanguard energy ETF, and then you can toss anything else extra in there. I mean, you can toss the iShares, but again, the ones that are the largest are the ones with total assets under management, right? You can use that to actually see which one is the largest ETF, and obviously Spider is. Then we have this Alerian, AMLP, that you can also toss in there, and then we have Vanguard energy ETF, right? Top three. Now, average volume, check out the difference between the Vanguard daily average volume versus XLE, the Spider fund. Hence why the Spider ETFs are great for day trading, right? And just short-term movements because it's very easy to get in and get out of positions versus the Vanguard ETFs. They're not so heavily traded. Their fee structure is extremely low. So that's why they're great for long-term passive investments, right? Hence why I always want to have a Spider ETF and a Vanguard ETF within every single sector. So that's kind of how you build your sector list. You go sector by sector and you pick your Spider ETF, your Vanguard ETF, and anything else that you want to toss in there as well, feel free to do so. But if you want to keep it simple, it would just be those two, Spider and Vanguard. Now, if you see here within the energy sector, we can go even deeper. Clean technology, clean energy, natural gas, nuclear energy, solar energy, wind energy. So you can really go deep within that sector and select whatever it is that you want to focus on, right? And create a little bit more in-depth list. And the same thing for financials, same thing for healthcare, same thing for industrials. You can even go within the actual sector, aerospace, airlines, and so on. Materials, focus on different things like aluminum, fertilizer, gold miner companies, home builders, so on. Technology sector, this one's again, you can go pretty deep into cloud computing, any internet, nanotechnology, semiconductor chips, social media ETFs. You can go into communications, utilities, and so on. So these are again the 11 major sectors, and then within them you have kind of different things that you can also focus on within that specific sector. So if we go back here, again, this is kind of what it's going to look like at the end of the day, and it may not be in the exact same order as mine, it doesn't really matter, but again, you will have, once you do that, you will have a list of different ETFs that you want to focus on. Now, I tend to toss in a few extra ones here and there if I find that they're interesting, but again, the ones that you want to focus on most are Spider and Vanguard. They're the most popular, right? Spider, again, for day trading, Vanguard for short-term long-term investing. Now, is there anything else I can talk about here? Well, one thing that you can also do is, let's say we go to the financial sector. You'll notice I have some financial ETFs, but I also have some companies. JP Morgan, Bank of America, Wells Fargo, right? So on. If we go to technology, I get Microsoft, Apple, Google, Facebook, so on. And if you go to real estate, I get a few other real estate companies in here. So within every single ETF consists of various stocks, various companies. So if you want to go deeper, and if you want to expand on your watch list, the thing that you can do sometimes is, let's say you're looking at XLK, you're looking at the technology Spider ETF, right? And you notice there's an opportunity here that you might be looking for a short, you might be looking for a long, whatever it is. You notice an opportunity within that specific sector. The first thing that you would do is you would just scan the ETFs within the sector to gauge an understanding of what is happening within that sector, right? And then if you find an opportunity, what you can actually do is you can go within that actual sector, within the ETF itself, and go look at the top 10 companies within that ETF. So how do you do that, right? How do you figure out what are the top 10 companies within the specific ETF? So if we go to technology sector here, let's find it. There we go. So if we select tech and we go to XLK, QQQ is again very popular ETF. You should toss that in under your pretty much under your technology sector. Pretty much you want to focus on anything that's big, right? The top 3 kind of big ETFs. You always want to have a Vanguard, so sometimes a Vanguard ETF might be top 5, but you always want to have a Vanguard, you always want to have a Spider, and if there's something bigger like QQQ is the most heavily traded technology sector ETF. You can see it here, it's the biggest in total assets, and it's also the biggest in daily average trading volume, more than double the Spider fund, right? So sometimes you'll find that. So just toss that into your sector list. So if we go into QQQ, if we click on it, to see what is within that specific ETF, right, you would want to go to holdings. So you go on holdings, and here we go. Apple, Microsoft, Amazon, Facebook, Google, Intel, and so on, right? Now, check it out. It also shows you the holdings, the weight, so Apple is 12% of QQQ ETF, so you can take top 5 or top 10 and toss it in there, You can even go deeper, pick some of your favorites and toss them under. So you can see under my technology sector ETF, I got XLK, QQQ, I got the Vanguard, you know. I also have Microsoft, Amazon, Apple, Google, Facebook, Intel, Netflix, Adobe, and so on, you know. So again, I take some of my favorite companies, I toss them into that sector, you know. In some sectors, I might have less companies and so on just because they're not that interested to me, you know. But whenever I find an opportunity within the sector, I want to go deeper. I might want to look at the actual stocks, the companies that are within that specific sector to actually see what is going on. And sometimes the actual companies might actually give you a larger return than the actual ETF. But it's a little bit more risk, simply because from an investment point of view, it's a little bit more risk because now you're just investing in one company versus the broad sector itself. So that is it for how to make your watch list. Now, one thing that you can do here is you can make your sector kind of watch list, right? With every single ETF within that sector, again, focusing on the Spider ETFs, Vanguard ETFs, and if there's anything else within the top 3, that's pretty large, you can toss that in there as well. You can go even deeper by taking companies that actually fit into that sector and tossing it into your watch list as well, like as I just showed you. Now, another thing that you can do is really quickly, you can also do the same kind of idea, but focus on various industries, aerospace, mining, and so on, right? Biotechnology, and whatever it is, whatever industry really interests you. You'll notice that once you start trading and researching the equities market, you'll notice that, oh, maybe this one aerospace industry, because you're interested in space and the development over there, so you might want to focus on the aerospace industry and you might find some opportunities there. You're interested in gold mining industry. You're interested in semiconductors because you think telephone chips or whatever will explode, or biotechnology. So you might go even deeper and do the same kind of thing within industries, not just sectors, but industries. And you can find them within the ETF database as well. So that is it for this watchlist creation. It was pretty deep. I think I covered everything that you need to know to actually now create yourself a watch list that's focusing on the equity sectors. And this will do the job. This is all you really need, right? You don't really need anything else. Now, this is good for day trading. This is also good for swing trading. So you can use this on a day-to-day basis, or you can just use it if you're swing trading the equities market once a week on a Sunday to make your long-term watch list. That is it for this lesson. Hope you enjoyed it. I'll see you in the next one. Take care.